Hello, and welcome to Crypto Investing for Beginners. I'm Chrissy Darlington, and I'm excited you're here. If you're just starting out with crypto, you will enjoy this video as I will feature two popular platforms for buying crypto and even doing a strategy called staking, where you can earn rewards by holding crypto and staking it on some of these platforms. These are major exchange platforms, very common. One is Coinbase and the other was Kraken. Of course, there are other platforms out there, things like crypto.com, that can let you buy crypto through your bank account or a debit card. But what I want to feature these two platforms on Coinbase and Kraken is because they're some of the easiest platforms for beginners to use when they're first starting out in crypto. Now, below this video, I have referral links to both of these platforms. If you use my Coinbase link to sign up, we both will earn a Bitcoin reward on your first purchase of crypto in the platform, provided you leave it on the platform for at least a week, and you'll see that Bitcoin come into your account. And I believe it's a minimum of $15 that you need to purchase and let it sit on the platform. And also, Kraken has a referral program as well when you purchase through my link. So I just wanted to make that note that as you're getting started with crypto on these platforms, I have the referral links posted below the video. And you can easily earn rewards by holding some of the crypto on these platforms using a method we call staking. So let me show you Coinbase and Kraken, how they work, and then I'll show you a short video describing what staking is, the pros and cons of staking. One thing you need to be aware with any investment, and especially when it comes to crypto, there is a high degree of risk. There's a potential of loss. And just like holding stocks in the stock market, crypto goes up and down, just like stocks do. So even when you're receiving rewards, like staking rewards where they give you a percentage of the coin, you can still have an overall loss during a period of time, because if the coin value is dropping faster than you're earning rewards on that particular coin, it could potentially work out to a loss if you're trying to convert that back to fiat, or what we would call like US dollar conversions to get it back to your bank. So just be aware that staking involves risks, just as any investment in crypto involves risks. So we'll go over that a little bit more. You can watch it on the little AI video I put together, kind of describing staking and how it works. But that's just something to be aware of. No matter what investment you're in, there's always a potential for loss. But the advantage of staking, it's really ideal for that person who wants to hold the assets long term. Just like if you buy a house, the market may go down on that house, but as long as you don't sell the house while it's down, while the market is down, you're not going to have any real loss. Same thing is true for crypto. The key is, if you're going to be holding crypto long term and staking it, it's ideal for that person who's not looking at selling anytime soon and can hold it for the long haul for the potential benefit if the price goes back up to where you bought it, and ideally continues to grow from there. And so today I'm going to be talking about my favorite crypto tokens to hold in my platforms for staking. All right, so this first platform I want to show you is Coinbase. It's probably one of the oldest platforms out there, and most likely, if you've heard anything about crypto, you've heard about Coinbase. Coinbase is where we connect our bank accounts to be able to buy the crypto. And again, like I said, you can use a bank account, direct ACH transfer, or a wire transfer from your bank to fund your crypto, or you could also use the debit card. The advantage of a debit card or wire transfer, the funds are available right away, whereas ACH transfer tends to take a couple days and up to 5 days business days before they'll even let you have those funds to be able to move anything off the platform. So that's just something to know about how it works here in the US. Now I know in Canada you guys have something like E-Track. I'm not even sure how to call it, but it's something that makes the funds available right away. Your system runs a little quicker than it does here in the US. In the US, the only way to get those funds available right away for being able to transfer anywhere off the platform is to use a wire transfer or a debit card. But anyway, let me show you the advantage of buying crypto on Coinbase and staking it. I have here under the Home tab, you've got crypto and then you have cash. In the cash section, you have something called USDC. Think of USDC like the US dollar, but C is the crypto version of that dollar. If you buy USDC, it's really easy. You can click on it, and here it has the option to deposit to USDC on the right-hand side of the page, or you could withdraw it once you bring profit in. So like I have 125 already in USDC here in my Coinbase. And so if I wanted to take this back to my bank, it's very easy because I have this USDC is easily transferred to my bank account. As you can see, I have an instant transfer with fees, or I can do in the US 1 to 3 business days to transfer right out of USDC back to my bank. But the advantage of USDC is a lot of our different investment platforms that are off of Coinbase, not the ones that are on, but the ones that are off, will take like USDC through a MetaMask wallet. And so I have trainings on how to set up a MetaMask self-custody wallet that you can transfer USDC to and then go into other crypto platforms from there, which is a strategy we use for investments that tend to pay much higher returns than what you get in staking crypto. So that's another strategy for another day. Today we're just talking about Coinbase, what is available on Coinbase or on the Kraken platform, which also has a connection with your bank account. So here on Coinbase, under the Home tab, you have the cash form of your US dollar in crypto or just a regular wire transfer. When you send that in, it just shows up right here on this line. And if you send this anywhere, you hit the 3 dots and you can send your crypto form of USDC off platform to a self-custody wallet to go into other investments that pay much higher returns. That's pretty much how you do it. Either deposit or send, receive. These options right here under the 3 dots of your USDC, that's where you're going to easily transfer your crypto when you're working with a self-custody wallet like MetaMask. That'll be, again, a study for another day. Now, let me show you the crypto side of Coinbase. And these are common cryptos that you can buy on Coinbase, but Coinbase lets you buy much more. If you can't see the asset you're looking for on Coinbase, and a lot of times when you first start out, you might just have Ethereum listed here, or maybe you won't have anything at all. These are my cryptos that I decided to buy because they're very popular cryptos. I have 2 of them staked, Ethereum and Solana, because they are network tokens that are very popular and have the potential of long-term growth. Both Solana and Ethereum, because they're used so much in transactions, they're likely going to grow over time. However, in the short term, as you see here, my Solana has gone down in price. I have an unrealized return of about $15 potential loss if I tried to sell it right now. My Ethereum has gone up about $8. And of these 2 stake balances, you can see here I've received only $4 in earnings since I bought these earlier this year. And that's basically because the staking on Coinbase, the payouts on these particular coins vary about 2 to 5%. And it all kind of depends on the market, and what I'm actually making isn't very much because I don't have a high degree of my investment dollars in here staking, primarily because I can make more off the Coinbase platform off of the regular networks in some of our other investment platforms, which are also noted below this video. I have links to our section of off-platform potential investments that you can get into. But again, everything is even higher risk when you go off of Coinbase because those platforms aren't insured at all by any exchange, and because those other platforms are sometimes owned by just various business owners that are having investors come in to help them grow their businesses. The payouts can go off and on sometimes, depending on the business owner's how well his business is doing, or if you're doing like a Bitcoin mining pool. If the Bitcoin is producing well, then your payouts will be great, but they could diminish depending on how well the pool is doing. Or sometimes you get somebody who's not very ethical running a business and he just runs off with all the money. That can happen off the platform. So those other higher returns that you can get in some of the other investments, although they are very lucrative, can be extremely risky. And we try to avoid Ponzi schemes, but sometimes you end up in those. And fortunately, most of the time we try to get our investments out, but sometimes we have gotten caught in those. And so again, high risk, but high reward. So just what we like to do is have a portfolio of different types of investments. And by hedging with multiple different types of investments, we can win in the long haul, even if in the short term, let's say you're staking some coins and the market drops. If you can hold past that market drop, it can work out very well for you in the long term. Real quick, I want to show you this for staking Ethereum or Solana, and I know that Coinbase supports another asset for staking, but they don't have a lot. But I want to show you, this is my account where I have just under like $100 in here, and it's just under. It's $96. And I haven't really earned much. 15 cents a month has kind of been lately what it's making. So it doesn't make a lot, but I did want to show you it's as easy when you buy, let's say you buy Ethereum for staking, or you buy Solana and you want to store your crypto here on Coinbase. It's really easy. Just click buy and stake. And then of course, once it's staked, it will give you these little rewards. And it's only like, I think 2% APY. So it's not much. I get a penny here, 2 pennies there. Like, it doesn't pay a lot, but I just want to show you that it's better than nothing. Buy and stake and unstake when you need to, send it out of the platform or use it for something. So that is how you do it here with Coinbase. So there are a lot of different ways to make passive income online through investments in the crypto market. And this is one way to do it. So here on Coinbase, these are the 2 coins. There's another one, I think it's Cardano or something like that you could also stake. But these are the network coins that I find the most valuable for my investment strategy. So these are the only ones I have staked here on Coinbase. However, over here in Kraken, I just opened up this account, and so I don't have any coins in here yet. But let me show you what they have to offer. Kraken also, just like Coinbase, connects up with your bank account. You can deposit fiat, just like Coinbase. When you go to bring funds into, let's say, buy USDC, that's where you can connect your bank account. Same thing with Kraken. You can connect your bank account with Plaid. Plaid works to verify your identity, your driver's license, and usually Plaid uses like a video capture of you, particularly on Coinbase, to be able to verify your identity. If you have trouble at all with Coinbase, sometimes the verification of identity, we've had some trouble with Coinbase. Sometimes people have trouble getting through all of the verification, what is called KYC, Know Your Customer Verification. So Kraken can be another platform to buy crypto and can help you connect up into the crypto market potentially on Kraken if you have any trouble on Coinbase. So we use it as an alternative platform for people getting started in crypto and perhaps wanting to invest in some of our other high-risk platforms that also have very high rewards. You'll have to get into the crypto market one way or another. So if Coinbase doesn't work for you, try Kraken. And there's another site called crypto.com. The fees are a little bit higher on that one, but that's another one you can try for getting into the crypto market, connecting up your bank account or using a debit card. So once you deposit your funds with Kraken, you go down here to the Earn tab. And here is where you can find coins that you can stake on the Kraken platform. And here, these coins, I'm not as familiar with myself. They're not as popular as like Ethereum, which is used on the Ethereum network, used all the time in transactions on Coinbase. I don't know what these coins are used for, and I would have to research them before I would invest in them. But you can see their payouts are much higher. Also, the cost of the coins are much lower. So I would recommend just Googling and researching these coins, and maybe some of these might be something you might want to diversify into. I might even do so myself once I learn more about the platforms that these coins support. But the payouts, 21% APY. That means it's compounding that coin 21% over the course of the year. And if it's a coin that I research and really like and think it has a long-term potential for growth, that might be something I would buy and stake within the Kraken platform. So I wanted to show these two platforms as possibilities for ways to make money with crypto. And also Kraken, as well as Coinbase, has a trading platform as well. In the trading platform, you can buy and sell or take your crypto that you buy and sell, and you can trade it, taking profit when the coin goes up and selling it before it drops, or buying it when it drops so you can take the next ride up. And Kraken pretty much supports all the major coins. Like you can see right here, this is a Bitcoin chart right here. A very popular crypto, and you can also search out other coins that it will support in the trading platform here in Kraken, just as it does here in the trade section of your Coinbase account as well. For ease of use, I find Coinbase very simple, very easy. It's my preferred platform for anyone getting started. But Kraken is a good alternative, especially if you're struggling to get all through the KYC verification process on Coinbase. Kraken might provide some good alternatives for you. All right, so with that, I'm going to turn over to my AI video for you to watch and learn a little bit more about the pros and cons of staking coins, how it actually works on the blockchain, and how the rewards are gained in the process when you stake crypto on Coinbase or Kraken.
Staking is a way to make your cryptocurrency work for you. Think of it like a high-yield savings account. But for the digital world, your coins get locked and the network generates reward coins back to you. You lock up your coins to help secure and operate a blockchain network. The network in return gives you rewards for your participation. This process is fundamental to blockchains that use a proof-of-stake consensus mechanism. It's a system where holding the currency grants you the power to validate transactions. Staking provides a direct way for you to contribute to a network's health and decentralization while earning a return on your holdings. A powerful combination that attracts many long-term investors. People stake their assets for several compelling reasons, the primary motivator being the generation of passive income. Instead of letting your digital assets sit idle in a wallet, staking allows them to generate a steady stream of new coins. This can significantly increase your overall holdings over time, especially if the underlying asset's price also appreciates. Beyond the financial incentive, many users stake because they believe in the long-term vision of a particular project. By staking, they are actively participating in the network's security and governance, helping to ensure its stability and resilience against attacks. While the prospect of earning passive income through staking is highly attractive, it is crucial to approach it with a clear understanding of the inherent risks. The most significant of these is price risk. The value of cryptocurrencies is notoriously volatile. It is entirely possible for the price of your staked asset to fall so dramatically that the losses outweigh any rewards you have earned. For instance, earning a 5% reward on an asset that drops 30% in value still results in a substantial net loss in fiat terms. Staking is therefore best suited for assets you are comfortable holding for the long term, regardless of short-term market fluctuations. Another major consideration is platform risk, also known as custodial risk. When you stake on a centralized exchange like Coinbase or Kraken, you are entrusting them with your private keys. You do not have direct control over your funds. This exposes you to the risk of the platform being hacked, facing regulatory action, or becoming insolvent. The mechanics of staking are surprisingly straightforward, especially when using a centralized platform. You begin by choosing a cryptocurrency that supports staking. You then delegate or commit those coins to a staking pool or a service. This service, often an exchange like Coinbase or Kraken, runs the complex technical infrastructure known as a validator node on your behalf. This node participates in the network's consensus, proposing blocks and validating blocks of transactions. For this service, the network issues rewards, which the platform then distributes among all the participants after taking a small fee for its operational costs. This model makes staking accessible to everyone, not just those with technical expertise. In essence, staking transforms you from a passive holder into an active participant in a blockchain's economy. It aligns your financial interests with the health and success of the network. While a traditional savings account earns interest from a bank lending out your money, staking earns rewards directly from the protocol for the security you provide. This direct link between your contribution and your reward is a core tenet of the decentralized finance world. When placing Coinbase and Kraken side by side, the most immediate difference is their target audience. Coinbase is built for simplicity and accessibility. Clean interface, minimal steps, beginner-first design. Great starting point for new stakers. Kraken is also user-friendly but data-rich and option-heavy. That can intimidate first-timers, yet it's loved by intermediate and advanced users who want control and more assets. Visual comparison: Coinbase versus Kraken table with ease of use, coin selection, security. Both take a commission from gross staking rewards, so compare the net APY, the rate after fees. Before you commit your funds, running through a final checklist can help you avoid common pitfalls and ensure your staking journey begins on the right foot.